Hello, everyone. As I'm sitting here watching the weather map of the hurricane that is approaching the state of Florida, I am reminded about some of the tax implications that come along with disasters, specifically the refund claims that can be made. And I realize that a lot of people might not be aware of the difference between a federally declared disaster area and a qualified disaster. So, a federally declared disaster area, that is when the president or declares that it is a federal disaster, and it opens up the FEMA relief of FEMA loans, and it opens up a lot of services for that area. And once it's declared a disaster area, the IRS will often issue uh, extended due dates for tax returns, tax payments, and that sort of thing. A qualified disaster is a disaster that has been designated by Congress as a qualified disaster. And the last set of disasters that was actually designated as qualified disasters were the 2020 COVID disasters and the hurricanes that occurred prior to 2020. You may ask, what's the difference? Well, the difference is the tax consequences of your refund claim. For a federally declared disaster area, you can make a claim for refund for your losses, your casualty loss of your home, but that loss is subject to reduction of 10% of your adjusted gross income. So, for example, you would take your loss and you would reduce it by 10% of your adjusted gross income, and then if you itemize that balance gets added to your itemized deductions, and if you don't itemize, it gets added to your standard deduction, and you can file a refund claim for the taxes, or you can include the loss in your taxes for the year of the loss, or you can, if you're within the time frame of 6 months from the due date of the previous tax year, you can file a claim for refund based on your previous tax year. A qualified disaster means that you don't have to do that 10% AGI add back. And what that means is you have a much bigger loss deduction. For example, one client I'm working with, that's the difference between a $4,000 refund and a $14,000 refund. So there are several big disasters: Hurricane Ian, some California wildfires, the Hawaii wildfires, the Ohio train derailment. There is a bill that is in Congress. It passed the House back in February, and it has been stalled at the Senate ever since. And until that bill makes it out of the Senate, there is no qualified disaster for all these very large federal disasters. So if you want to see some movement, contact your congressman. Tell me you want to see some movement on that bill. But in the meantime, as long as you're in a federal disaster area, you can do the smaller refund claim, but keep your eyes out, because once it is declared, or if it is declared a qualified disaster, then you will be entitled to a much larger claim. I hope this is helpful. Talk to you later.